we will be having question answer session, doubt session at the end. Okay, so please don't unmute. We will give you chance to speak. A very good morning, all the students. I am Mr. Syed Wakil, Assistant Professor, Department of Commerce, PG and Research Center. I welcome you on the third day of Skill Development course. That is the special lecture series for TY BCom students and MCom Part 2 students. I welcome today's resource person, CA Mahesh Atre sir. Today's topic is gross total income, Income Tax Act 1961. It is not easy to understand, but the way sir is teaching the students, we got very good responses from the students regarding 2 previous sessions, sir. Your lectures were highly appreciated by the students.
Thanks to all.
I request CA Mahesh Atre sir to kindly continue.
Okay. So I welcome all of you. I'm very thankful to the college authorities as well as my friend Professor Wakil sir for giving me an opportunity. Now continuing with the third lecture, now we are going to discuss about the last part, that is the how to calculate the gross total income. Now I am going to share the screen and you will find that before discussing the gross total income, we are just going to take the review of yesterday's income from salary. Now, yesterday we already discussed about the income from salary. Now, apart from the income from salary, there are other heads of income: income from house property, income from business and profession, capital gains, and other sources. By taking the total of all these heads, we are going to call as gross total income. Once again, I am going to inform you that there is a need to classify the income under the 5 heads, even though we are going to take total of all income and going to call it as gross total income. Now, why it is so? Because the provisions are going to be different. Similarly, the deductions are going to be different. The nature and the classification is going to be different for each head of income. So it is necessary to classify the income under the 5 heads. Yesterday, we already discussed about the salary. Now we are going to discuss regarding house property income. When we are going to call that income is from house property, there are a few conditions that we have to that the assessee has to satisfy. So first is there must be a property. Property means house property. And second thing is that the assessee is the owner of the that house property. And third condition is that the property is during the previous year is not used for his business or profession. If these 3 conditions are satisfied, then only we are going to say the income is from house property. So those who are newcomer or those who are not aware of the Income Tax Act, please try to understand that if these 3 conditions are satisfied, then only it is coming under the head income from house property. The first condition that the assessee must be the holding the property during the previous year. Second thing is that the assessee, the property is the assessee is the owner of the said property. And the third condition is that the property is not used by the assessee for his business or profession. Then only it is going to be an income from house property. Now, normally the property given on rent or self-occupied property is coming under the head income from house property. And you know, in this case, the very few deductions are available. That is, in case of rented premises, we are going to call it as property given on let out. In that case, the deduction is available for municipal taxes paid, as well as the interest amount for the borrowing for the funds borrowed for this property. Standard deduction is there in between, that is 30% standard deduction, and last one is the income interest on funds borrowed for the property, the said property. The second one is the self-occupied property, that is the owner is using the property for his own purposes, that we call as a self-occupied property, where the annual value is always nil only the interest on house property, that is the interest on borrowing funds, is going to be deducted. So these deductions are available. So we are going to call that income from house property. Next one, income from business and profession, which is very common. I'm always used to say that when income from business and profession is concerned, it is very easy to discuss in the classroom, but it is very difficult at the practical life, because business, profession, and vocation are of different types, and particularly we have to be very careful about the person, as well as we are going to classify whether it is a business or profession. Under Income Tax Act, business and profession, there are some different deductions are there and different provisions are there. Now, business may be of any kind. Business may be a trading activity, maybe the manufacturing activity, maybe the agency activity, service sector, that means banks, insurance company, or IT sector, all are coming under the income from business. Now, what is meant by profession? Profession means where the specific skill is required, and under the Income Tax Act, basically profession includes medical profession, accountancy profession, that means chartered accountant, then architect, software consultant, like that, advocate, basically. That is specific. These profession are defined under the Income Tax Act, and the provisions are different. Just for your information, in case of income from business, the Income Tax Act has suggested only to follow the mercantile system of accounting. There is no other way out. In case of profession, they have insisted to follow the cash system of accounting. So there are actually three methods of accounts are there: mercantile system, second is the cash system, and number three is the hybrid system. But now the hybrid system is not at all applicable in case of Income Tax Act is concerned. So in case of income from business, you have to follow, you means the businessman has to follow the mercantile system, and in case of profession, cash system. So there is no way out. It is the mandatory to follow all these methods of accounts. Now, in case of income from business and profession, it is very, very wide section, and there are a number of provisions are there. In case of income from business and profession, there again the limit is there. Beyond that limit, the audit is compulsory. So in case of income from business, if your turnover of the businessman is more than 1 crore, again the audit is applicable. In case of profession, if the turnover, that is gross receipts, are more than 50 lakhs, the audit is compulsory, that we call as a tax audit. So in this case, income from business and profession, a person has to be very careful, because he has to declare his own income on the basis of information and the data. And another thing very important, that is the books of accounts. In case of business and profession, it is better, or rather in a few cases, it is mandatory to maintain the books of accounts. You know the books of accounts as you are students of accounts and commerce. In that case, normally the cash book, bank book, general ledger, journal ledger are the mandatory books of accounts, on the basis of which the income is assessed. Now, before discussing in detail other heads of income, I'm just reminding you about the first lecture, where I already told you about the taxation, direct tax and indirect tax. Now, in case of business and profession, you have to be very careful, because indirect tax is also applicable in most of the business houses or business groups. Now, that indirect tax means GST, maybe the excise duty, custom duty, local taxes, like that. So books of accounts should be maintained in such a manner that it is going to generate the information of both types, that is for indirect taxation and for direct taxation. Now, why it is necessary? Now, in case of business and profession, once you are registered under the indirect taxation, it is going to be linked directly, and your data is going to be shared by both the authorities, that means income tax authorities as well as GST authorities. So you have to be very careful. Now I am going to ask you, that means you means student as well as the professionals, and particularly the accountants, while recording the transactions in the books, that the same information is going to be shared by both the authority, that is GST purpose as well as income tax purpose. So you have to be very careful while entering the data, while processing the data, while sending the returns to the income tax authorities as well as GST authorities. So that is the income from business and profession. Now I'm going ahead with that. Capital gains. Now, what is meant by capital gains? Now, in an Income Tax Act, capital gain is applicable on the transfer of capital asset. So they have given the definition of capital asset, whether the asset may be tangible or intangible, whether it is movable or immovable, or whether it is in case of capital asset, if the asset is not used for the business, then used for the business, then you are going to claim the depreciation. But even though in case of capital asset, you have to be very careful about the calculation of capital gain. What is capital gain? Capital gain means the profit on transfer of capital asset. So it is very important. Now, it is not only for the businessman, but for the others also. The capital gain is very important, particularly when you are going to transfer the shares, mutual funds, or it may be a precious stone, metals like that, jewelry particularly. And in case of businessman, all the assets, when they are going to transfer from their business, they are going to calculate the profit on sale of capital asset. Now, it is very important. Capital gain is very, very similar to the income from business and profession. You have to be very careful to find out whether the income is from business or profession or capital gain. In most of the cases, it is the line is very thin. समझना बहुत मुश्किल होता है ये income from business है या income from capital gain है. So you have to be very careful as a student or as a practitioner to find out the income from business or profession, or as well as capital gain. Now I am going to give the one example to you, that in case of shares, those who are dealing in shares, they have to particularly very, very careful about whether to find out whether the income is income from business or profession or capital gain. Now check why it is so. Because if you are going to invest, your intention is for investment purpose, it is going to be capital gain. But if you are going to do the business of shares and mutual funds, in that case, your intention is to earn profit as a businessman, and in that case, it is not going to be capital gain. It is going to be the income from business and profession. So please, you have to be very careful about the provisions of capital gains, and it is very, very near to the income from business and profession. And there may be legal dispute regarding the classification of income under the head income from business, profession, or a capital gain. Now, going ahead with the capital gains, basically we are going to discuss about the capital gain is of two types. That is long-term capital gain and short-term capital gain. You have to find out both long-term capital gain and short-term capital gain. But we try to understand whenever there is a capital gain is calculated, either the capital gain may be a short-term capital gain or long-term capital gain. A particular transaction, you have to be very specific whether it is a long-term capital gain or short-term capital gain. Now, we are not going in detail because we are going to concentrate on discussing about the gross total income. But in case of capital gain, you have to be very careful, because in capital gain, both the rates of taxes are applicable. In few cases, it is going to be slab rate. In few cases, it is going to be a flat rate. So in case of capital gain, it is very, very crucial to find out the income under the head capital gain as well as the tax calculation. Now, the last part is the income from other sources. In case of income from other sources, particularly those income which are not covered under the other heads of income, that is income from salary, income from house property, income from business or profession, and capital gains. Now it is governed or covered under the head income from other sources. Now, income from other sources is very, very easy, but here you have to be very careful about the whether it is not it is already covered in the other heads of income, then don't include in the income from other source. Just I'm going to give the example for income from other sources is income from interest on FD with bank, interest on FD with company, interest on recurring deposit, interest on saving deposits, dividend income, interest on debentures, dividend on mutual funds, So all these types are going to be the income from other sources. So you have to be very careful about that. And another part which we are included in income from other sources are in case of you are going to get any gift from your relative or distant relative or your friend or any other any other person. In that case, up to a certain limit, if it is more than 50,000, then it is going to be included income from other sources. Now, in case of casual business, that means a person is not doing regular business, but a casual business. In that case, that income is also included income from other sources. Suppose a cooperative society is there, and that society is going to give chairs and tables on the rental basis. That is not their business, but they are charging to give the chairs and tables for rental purpose, and the rent is collected. In that case, it is not the income from business and profession of that charitable or cooperative society. Similarly, suppose you are also having some chairs and tables, and you are giving your neighbor on the rental basis, use it. It is not the income from business, but it is income from other sources. So please note that income from other sources, there are certain specific income, and other one is that those income which is not covered under the head income from other heads, it is included from.
Sir, unmute please. Unmute please.
Okay.
Yes, sir, you're audible now.
Okay. Thank you. Now, taking a total of all heads of income, and then we are going to call it as gross total income, GTI, gross total income. That means taking the total of all heads of income, that is income from salary, income from house property, income from business and profession, capital gains, and other sources. Then we are going to call it as gross total income. Now, gross total income is very important because now we are going ahead to calculate the tax. But in between, we are going to do some deductions which are very important before calculation the tax. So from gross total income, that is total from all heads of income, we are going to deduct the adjustment of losses of the current year or earlier years. Now, if any loss is there, carry forward loss means if loss is incurred in the last year, then it is going to be adjusted in the current year. And that after adjusting the adjustment for losses of current year as well as previous year, then we are going to claim the deduction under section 80C to 80U. There are various deductions available under section 80, particularly we call it a section 80C to 80U, and then only we are going to call it net taxable income. So students, please keep in mind that don't directly calculate the tax on gross total income. First of all, check that whether any carry forward losses are there from the previous year, and any deductions is available under section 80. Then after taking the deductions, claiming the deductions, then we are going to call it as a net taxable income. Before discussing net taxable income, it is better to discuss few deductions under section 80. Now, most of the students and particularly the deduction under section 80C is very popular. That is going to be the contribution to the provident fund, contribution to the PPF, payment of LIC premium, maybe for NSC. There are certain schemes where you are going to contribute during the year. The deduction is available up to rupees 1,50,000. So from the gross total income under section 80C, the deductions are available to the assessee, and particularly in that case, the payment made for the PPF, public fund, GPF, insurance, that means life insurance particularly, and the deductions, the amount, maximum amount is 1,50,000. The additional deduction is possible of 50,000 if the contribution is to the pension fund, that is NPS, National Pension System. So that is the additional benefit of 50,000. So that is deduction available under section 80C, 80CC, 80CCD, and the total deduction maximum from 1,50,000 plus 50,000. So 2 lakhs are 2 lakhs deduction is available under section 80C. There are various options are available under section 80C. There is no compulsion that you have to contribute in that section in that scheme only. It may be a PF, GPF, PPF. It may be a national savings purchase of national savings certificate. It may be a repayment of housing loan installment principal amount, not the interest amount. Interest is deducted under income from house property, but the installment is deducted under the head income from deduction from 80C. So there are a number of even education expenses are there. Education basically in education expenses, the term fee paid by the assessee on behalf of his children's. So these are the deductions available. These are the schemes are available under section 80C. So apart from that, very popular is the 80D, that is mediclaim. Mediclaim means medical insurance premium paid by the assessee for himself or his parents. If they are senior citizens, they are going to get the additional benefits. So under section 80D, medical insurance. Now, in case of medical insurance or medical premium, I'm going to inform you that please note that in case of 80D, the deduction is available to the assessee if the payment is done by check or by bank transfer. If the payment is done in cash, the deduction is not available. This note is very important for you, not in examination point of view, but in practical life of you. Please note in case of mediclaim, two things are very important. You pay the amount of your medical insurance only by check or by bank transfer. And second thing, not from income tax point of view, but for your personal advantage or for the personal benefit, pay the amount before due date in order to continue the benefit of medical insurance policy. Please note, don't forget to pay the insurance amount in advance or on the due date, but don't pay after that. Why? Because we will not get the benefit of medical policy. The policy lapses on the if the payment is not done before maturity or on the date of maturity. So two things you have to keep in mind as a student or even in after your completion of course. You please keep in mind that in practical life, when you are going to pay the medical insurance premium, pay on the date of maturity or before maturity. And second thing is that pay by check or bank transfer, maybe NEFT, RTGS like that. But if you are going to pay in cash, you will not going to get the deduction under section 80D. So in practical life also, it is very important to keep the provision in mind. Next deduction, you are very common 80G, that is donation, and donation is of two types. In one case, you are going to get 100% deduction, and in another case, you are going to get 50% donation. Again, the donation is going to be deductible under section 80G, but before claiming the deduction, check the provisions, and minimum the donation must be of rupees 250. There is a limit that if the donation is paid less than 250, you won't be able to claim the deduction under section 80. So that donation is also very important, and deduction are available under section 80G. 100% means if you are going to pay 1,000 rupees from gross total income, 1,000 rupees will be deducted. If you are if it is 50% availability, deduction is available. If you are going to pay rupees 1,000, instead of 1,000, you will get the deduction of rupees 500. So that is going to be the under the section 80G. You have to be very careful about claiming the deduction. So donation, please check that in case of donation now, you have to check that the 80G benefit is available. In the receipt itself, it is mentioned that the 80G donation is available. They also mention whether it is going to be 100% or 50%. They're also going to mention their name of the organization, particularly we are going to call charitable trust, and they are going to mention their address. And another thing you have to check that their PAN number. If you are failed to check that, then it is very difficult to claim the deduction under section 80G. So under section 80G, deduction under 80G is for donation. Check that whether it is the deduction is 100% or 50%. Another thing, you check the at any cost you take receipt of the amount paid as a donation, so that you will come to know the name of the charitable organization. Second thing is that their address, and number 3 is PAN number. So you will get the deduction under section 80G. That benefit is also available. I am not going to discuss each and every deduction under section 80, because there are a number of sections are there, and particularly in each and every section, as a student, as a practitioner, you keep in mind that there are certain conditions are there. You will get the deduction only if the conditions are satisfied. In most of the cases, we are failed to check the conditions, and at the time of claiming the deduction, we face the problem. So whenever you are going to do any investment, payment, please check the conditions under that section, and then only make the payment in that scheme or for that purpose. There are a number of deductions available. Another very common deduction is under section 80T. Basically, this for the investment done in interest earned on saving and interest earned on a fixed deposit. Those who are not senior citizens, that is senior citizen age is 60, the deduction under section 80T is available of rupees 10,000, and those senior citizen, they have raised the deduction up to rupees 50,000, and for them the interest on FD as well as interest on saving, these both are available. So that deduction is also available. Now another benefit you may get while you are going to upload your return through utility of the government, you will get automatic deduction once you enter the data in the income from salary, income from house property, business income, capital gain, other sources, and that facility is available because online entering the data, the computer or the software is going to alert you regarding claiming the deduction. So that is the benefit now on online utility you are going to use. Yes, now any difficulty, any query, you can ask me in the chat box. I'm going to wait for just a few minutes. Yes.
Yes, students.
So
Any
query is there, you can write down. Just I'm going to wait for 1 minute. Any query you can ask in the chat box. Okay. This deduction is available. Please try to understand. That deduction is for income from other sources. So when there is an income from other sources and the assessee is going to get interest on saving and interest on FD with bank, then that deduction is available. Now, what is that deduction? Up to 10,000 amount is going to be deducted. Now, I'm just for your information, I'm going to write down interest on savings account. Now, the amount is suppose rupees 15,000. The deduction is available under section 80T is of rupees 10,000. But for senior citizen, the government has given the additional benefit that not only the interest on saving, but they are going to get the deduction of interest on FD with bank and interest on saving. And the limit is of rupees 50,000. So for senior citizens, those having age more than 60, the additional benefit is given of rupees 50,000. Now, please try to understand these deductions are going to be, you are going to claim, or as an assessee is going to claim only when there is an interest on saving in case of other than senior citizen, and interest on saving and FD to those senior citizen whose age is more than 60. Please try to understand, if there is no income under the head income from other sources, then you will not get the deduction. So that is going to be the basic thing under section 80T. So the deductions are available here on the basis of income. So there are certain deductions are available. There are deductions are of different types. First is deduction is on the basis of payment and deduction on the basis of income. This deduction under section 80 is on the basis of income, whereas under section 80C, the deduction is available on the basis of payment, not on the basis of income. Yes. Yeah. Like section 80U. Section 80U is for the handicapped person. So those SAC who is handicapped, he is going to get the deduction under section 80U. So please check, because there are certain limits. Again, why I'm not going to discuss the total deduction under section this section, because there are conditions. For 80GG, now try before that I'm going to complete the section 80U. There are how you are going to claim the deduction. Again, I'm going to inform you that there are the deduction is on the basis of fulfillment of conditions. That means the percentage of what you call handicap. That means you are supposed to get the certificate from the civil surgeon regarding the percentage, how much percentage is there, and then you are going to claim the deduction under section 80U, because the deduction is going to be more in case of severe what you call that is severeness of the when we will find online software. Yeah, right. When not 9%, it is 8% of profit. That is we called as a presumptive taxation. Presumptive taxation is there. That is going to be, but in case of presumptive taxation, please note that in case of presumptive taxation, the limit is regarding the turnover. It is not for all. If your turnover is 1 crore or less than that, then it is going to be the 8%. In few cases, the turnover may be up to rupees 2 crores. You can claim the benefit of that. And I have yet to discuss about another query regarding one student regarding 80GG. 80GG is regarding the rent. Those SAC who is not able to claim under deduction under section income from salary, that is the HRA, that person can claim the deduction under section 80GG. That means a person who is paying rent to the landlord and he's unable to claim the deduction because he's some problem in case of house rent allowances, he's not able to claim the benefit. And those who are not getting income from salary, they can claim the deduction under section 80GG. Please note that all the time I am going to inform you that please check the condition and then only you are going to claim the deductions. Now another query is that here 80GG is deduction under of the correct. It has been introduced to provide relief. Correct. So sir has already given the answer. So I'm going ahead with that. I'm thankful to the sir for giving the explanation to the students. Now these are the deductions. There are various deductions. Particularly, please students, please note that I am not able to cover the deductions under section 80 because in few cases you must know the provisions of income from business and profession, particularly in case of IT sector, in case of hotel, in case of what you call backward industrial undertaking. There are various deductions are available, so we are not able to discuss that. On which property we can claim under section 80? No. Income from property is nothing to do with section 80GG. Please try to understand. 80GG is available those SEC who are staying not in their own property, house property, but in a rented property. Now, if the rented property is SEC is the employee of any organization, he is going to submit that details rent paid to the employer, and the employer is going to claim the deductions on his behalf as a house rent allowance. But those SEC who are unable to claim the deduction under section that means HRA or the person who is not an employee but getting another income from other sources, then he is going to claim the deduction under section 80GG. Please note that 80GG is nothing to do with the income from house property. Yes, if yes, any difficulty? Okay, yes. No, TDS is going to be different. If time permits, I will explain you the TDS. Please note, TDS is the last part. Yes. So if the time permits, I definitely explain you about the TDS. Now we are going to ahead with the next one, gross total income. We are going to claim the deduction for the losses, as well as we are going to claim the deduction under section 80. Under section 80, then we are going to call it as net taxable income. Now, just for your information, I am going to just give the here. Suppose the salary is of rupees 7,50,000. I am going to here show you that the salary is 7,50,000. That means net salary. If the salary is rupees 8 lakh, the standard deduction is rupees 50,000. So I am going to write down here net salary 7,50,000. So gross total income, there is no other income to the SAC. So I am going to write down here taking the total of all heads of income. So the gross total income is going to be, sorry, gross total income is going, I am going to calculate if the gross total income is going to be 7,50,000. There is no losses as such, but the deduction is available, suppose of rupees 50,000 for the PF. So the net taxable income of the SSC is going to be 7,50,000 minus 50,000. That is the 7 lakh. So that now I'm going to explain you the procedure. Take the total of all heads of income, then call it as gross total income, claim the deductions, then we are going to call it as net taxable income. Please calculate the tax on the net taxable income. Yes. So please calculate the tax on net taxable income. Don't calculate tax on the gross total income. When you are going to calculate the tax, please note that you must know the slab rates. So just for your information, I am going to show you here slab rates to find out the tax. So here I am giving you the table. I am going to show the table. Slab rates to find out the tax for individuals. Up to rupees 2,50,000, there is no tax. From 2,50,001 to 5 lakhs, 10%. From 5 lakh 1 to 10 lakhs, 20%. And above 10 lakhs, it is going to be 30%. Now the slab rate is going to be the different for the senior citizen. That is, this slab rate is first what we have discussed is regarding the slab rate for the other than senior citizens. Now here we are going to discuss about the senior citizens whose age is above 60 but less than 80 years. Their slab starts from rupees 3 lakhs. So up to 3 lakhs there is no tax, nil. From 3 lakh 1 to 5 lakhs it is going to be 10%. From 5 lakh 1 to 10 lakhs it is going to be 20%, and above 10 lakhs 1 it is going to be 30%. So the senior citizens, the calculation of tax is going to be different because the slab rate starts from 3 lakhs instead of 2,50,000 as an ordinary person other than senior citizen. And the last day I am going to discuss about the slab rate to find out the tax for super senior citizen above 80 years. For them, up to 5 lakhs there is no tax. From 5 lakh rupees 1 to 10 lakhs it is going to be 20%, and above rupees 10 lakh 1 it is going to be straightway 30%. So please check. Now again I am going to remind you about the last 2 lectures. Don't calculate tax directly, don't calculate income also directly. First of all, try to find out the status of a person, whether it is going to be an individual, partnership firm, HUF, or company, or local authority, or association of person, or body of individuals, or artificial jurisdictional person. Find out next is the residential status, whether that a person is a resident of India or non-resident. Then calculate all heads of income, classify the income under the head taxable income or tax-free income, keep tax-free income separately, and then in case of taxable income, divide the income or classify the income under the 5 heads: income from salary, income from house property, income from business and profession, capital gain, other sources. Then we called it as gross total income. Don't calculate tax directly on the gross total income. In case of SAC, please check any losses, maybe of the previous year, can be adjusted, give the benefit of that loss to be adjusted, or any deductions under section 80, then call it as net taxable income. Then according to status of a person, according to the age of the person, calculate the tax on income. Now, before discussing anything, I'm going to cover first of all the provisions, and then I'm going to, if possible, I will try to calculate the tax. Now, the next is rebate under section 87A. Now, government is what the government has given. Government has given some concession rebate from tax. Now, in case of rebate, there is a difference between rebate and deduction. Deduction is available always from income, but rebate is always available from the tax. There is a difference when to call deduction and when to call rebate. When we are going to discuss about the deduction, the deduction is before calculating the tax. Please try to understand. Whenever we are going to claim the deduction under section 80, 80C, 80D, 80G, it is from income, not from the tax. Please try to understand. The deduction is from the income, but rebate is not from the income, but rebate is from the tax calculation. When you are going to calculate the tax, then check whether any rebate is available. Please note there is a difference between deduction and rebate. When we are going to discuss about the rebate, that means tax is already calculated, and we are going to check whether any rebate is available to the SAC. Now, rebate is given now means under Income Tax Act, rebate is given at present, particularly those having income less than 5 lakhs, they are going to get the rebate. That means if the income is less than 5 lakhs, the rebate is available, and even though the tax is there under section 87A, getting a benefit of rebate, he need not have to pay the tax. Please check before those who are newcomer or those who are not aware of the income tax provision. First of all, you have to calculate the tax as per the slab. Then after calculation of the tax, then check whether any rebate is available. In case of rebate, if the income is less than 5 lakh, then only the rebate is available. But before that, you have to calculate the tax. If the income is less than 5 lakhs, the SSC can claim the rebate, and that rebate is available, and he need not have to pay the tax. But please note that before that, it is very essential to calculate the tax. Don't give advice or don't give anything consultation before calculating the actual tax. So if you are going to claim the rebate, it is better, or it is always advisable to calculate the tax first and then check the provision whether the rebate is available or not. If the income is less than 5 lakh, then only rebate is going to claim. If the income is slightly more than, once the income is more than 5 lakh, that is 5 lakh 1 or 5 lakh 2 rupees, the rebate is not available. Please note. Then again we are going to calculate the tax, and the person has to pay the tax on that. He is not eligible to claim the rebate. So please note, in case of rebate, if the income is less than 5 lakhs, the rebate is available. But in that case, you have to first of all calculate the tax, and then you are going to claim the rebate. Now, how much rebate is available? If the income is less than 5 lakh, up to the amount of tax, the rebate is available. You need not have to pay the tax. You need not have to pay that tax, means tax to be calculated, but rebate will be deducted, and the net tax payable will be nil. And there is no need to calculate any other taxes like that. So here it is very important provision under Income Tax Act that deduction is from income, whereas rebate is not from the income, but rebate is from the tax calculation. For that tax to be calculated, So rebate is going to be a very important part after calculation of deductions. So now, before calculation of anything, I'm going to discuss about the next thing. Net tax payable is calculated. Then please note that if the income is more than 50 lakhs in case of individual, particularly I am talking about the individual. If the more than 50 lakhs, the surcharge is there. Now, before discussing the provision, because you can discuss the provision at any point of time, or you can study from notebook. But here you will come to know in the first lecture, I already told you that in India, we are following the progressive tax system. So you will note that in here, as and when there is an increase in income, there is an increase in tax. Not only that, if your income exceeds 50 lakhs, then not only you are going to pay the tax, but you are going to pay the surcharge. Now, what is meant by surcharge? Surcharge means tax on tax. Here, surcharge means tax to be calculated, tax calculated, or charge. It is better charge or cess is calculated. Cess on tax. There is a difference between tax and surcharge. Tax is on income, surcharge is on tax. Please check once again. I am going to repeat. The tax is on income, but surcharge is not on income, but surcharge is on tax, or surcharge is on tax calculated. We called as a surcharge. So similarly, after calculating surcharge, again calculate the tax. That means tax plus surcharge. Then calculate the education cess. Then calculate education cess. Education cess means also a surcharge. At present, education cess is going to be 4%. Again, please note that education cess is to be calculated on calculated tax. It is not on income. It is tax on the tax. It is tax on the or charge on the tax calculated. Again, I am going to write down here charge on tax. So there is a difference between income tax and surcharge. Education says is going to be 4%, and then we are going to call it as total tax payable. What is meant by total tax payable? Please check it. First of all, you calculate net taxable income, calculate tax on income. Then, if rebate is available, claim the rebate. If surcharge is applicable, calculate that surcharge, add surcharge in the tax calculated, and then education says of 4% to be calculated. Take the total of all, and then we are going to call as a total tax payable. Now, one thing, education says 4% is compulsory. When there is tax, you have to calculate 4% as education says. There is no alternative, there is no option, but you have to pay 4% separate as education says, and then pay the total amount. So this is going to be regarding the tax calculation. Now, again, I'm going to wait. If any queries there, you can ask me, and then I'm going to explain, if time permits, regarding the TDS and advance tax. So
Yes,
just I'm going to.
You can write in the chat box if you have any query.
Yeah, education says. Now education says is additional tax at 4%. Previously it was 3%. Now education say, now government is going to collect from the assessee or the taxpayer not only tax, but they are going to collect the 4% as education says, and for education purpose only. That they are going to collect this fund and use it only for education purpose in India. So that we called as a education cess. Cess means tax. Cess means tax. But cess means here it is specifically वो जो tax लेते हैं government, ये लेने वाले हैं for education purpose in India. So they are going to collect separately education cess, education tax, and utilize for only for education purpose. Yes. Any query, any difficulty? Yeah. Yes, surcharge is added. So now try to understand. Now suppose the tax is calculated. Don't take this example. I'm not going to take this example because surcharge is applicable only when the income is more than 50 lakhs. Now suppose here the tax calculated is of rupees 40 lakhs. So there is no rebate. So So I am going to calculate this directly 40 lakhs. Then surcharge is calculated 10% of that. Now I am going to add this. So here that tax is going to be 4,40,000. Is it right? Sorry, here. Correct. 44 lakhs. Is it right? Correct. Now I am going to add 4% education cess on this. So now total tax payable by the SAC is going to be 45,76,000. So please calculate. First of all, if the tax is rupees 40 lakhs, surcharge is 10% calculated, is going to be 44 lakh. Education cess is calculated 1,76,000, and the total tax is going to be 4,57,600. Now please note the surcharge. You have to be very careful about that, about the slab, whether it is 10%, 15%. As and when there is an increase in income, surcharge is also going to increase. Yes, you are asking about the late fee, but late fee means we are going ahead with the filing of income. Filing of return. Then the late fee and interest is going to be there, because that is, first of all, we have to calculate the tax. Then we are going to calculate the deductions about the tax paid, that is the TDS. And then if there is a delay, then it is going to be the interest or late payment charges. Yes. So this is regarding the total tax payable. Yes. So again, I am going to wait. Any query? Any query? So any query? No. I am going to take the array. Try to understand. If this income, I have just taken an example. I have not calculated income. Suppose now, I have directly taken the income. Sorry, tax. If the tax is like that, I have not calculated the income. For it is very time consuming to calculate all these things, find out the rate. I have taken that if the tax payable, now here I have taken here, if tax payable is on income, then only I have calculated. I have not calculated the income, because for income purpose I have to take each and every income separately, then deduction separately, and then I am going to directly I have calculated, because the question was how to calculate the surcharge. Yes, that is the answer, is that surcharge is calculated like this. So I have not calculated tax. I have taken 40 lakhs as direct tax. Yes. Any difficulty, any query? Sir, how much time is available now?
Yes, sir. 20 minutes, sir. No problem, sir.
Okay.
One
So I'm
question
ready
is
to
on
continue.
rebate. What is rebate?
Yeah, rebate. Yes, query is regarding the rebate. Rebate is nothing but the concession given in payment of tax. Now, concession given to whom? Now, I am talking about the current scenario. In current scenario, the concession in tax is given to a person, and particularly in person to individual who's having income less than 5 lakhs. So that a person whose income is less than 5 lakhs, he is going to get a concession in payment of tax. So first of all, we are going to calculate the tax. If the income is less than 5 lakhs, then we are going to calculate the tax. Now I'm going to give an example now here. Suppose the other source is of rupees 4,50,000 and that gross total income is going to be 4,50,000. Yes, so now again I'm going to, now I'm calculating the surcharge. Now there is no deduction available in under section 4,50,000 under section 80C, because income from other sources, suppose it is going to be from dividend, there is no other income. Now I am going to take like is 4,50,000. Now calculate the tax on income 4,50,000. Now if the assessee is not senior citizen, so how we are going to calculate the tax? Now we are going to calculate the tax 4,50,000. Now I am going to calculate the tax here. 4,50,000 is the total income. Now up to 2 lakh there is no tax. So how much is the balance amount? 4,50,000 minus 2,50,000, 2 lakhs. The the slab rate I have mentioned is wrong one. It is 5%. So make a correction. Those who have written, sorry, I have written 5 here. So 5%. So now we are going to calculate the tax on 2 lakhs at 5%. So that is going to be tax is rupees 10,000. Now here the tax is calculated as 10,000. Now we are going to check the provision under Income Tax Act, whether the income is less than 5 lakh, whether it is an individual. Yes, he is going to get the benefit of rebate under section 87A. Now here the rebate is going to be 10,000. So net tax payable is nil, because his tax is 10,000 and the rebate is going to be 10,000. Now please, why the rebate he is going to get the rebate? First of all, he is fulfilling the condition. His income is less than 5 lakh. It is going to be 4,50,000. Then we are going ahead with the calculation of tax. Tax on income is calculated at 5% on rupees 2 lakh. How it 2 lakh is calculated? Total income is of rupees 4,50,000. Up to 2,50,000, there is no tax. So the balance amount is rupees 2 lakh. Calculate at 5% on rupees 2 lakh. The tax is of rupees 10,000. So the rebate is going to claim of rupees 10,000. So he need not have to pay the tax. But I am going to inform you, even though he is not going to pay the tax, he has to file his return of income. Why? Because his income is rupees more than 2,50,000. It is binding on him to file the return of income tax, even though there is no tax. So reverse way, ऐसा मत सोचो that his income is less than 5 lakh, he need not have to file the return. Please note, assessee has to file the return once his income is more than 2,50,000, whether the tax is payable or not. Try to understand. Here, once the income is more than 2,50,000, the return is to be filed. Please note, even though the tax is nil, he has to pay the, he has to file the return every year. So when we are going to give the advice to your client, please note that he need not have to pay the tax, but he has to file his return of income. Yes. So that rebate is going to be different from deductions. Deduction is from income. The rebate is the deduction from the tax. For rebate, it is necessary to calculate the tax first. So this one is the rebate. This is given a concession to those having income less than 5 lakhs. Once the income cross 5 lakhs, the rebate is not available. Yes, any query, any difficulty? One student asked me a query regarding the TDS. TDS means tax deducted at source. Now take the example of a case. A person is working in college as a professor, he is getting salary. Now it is the duty of the college to deduct the tax. First of all, it is the duty of the college to calculate the tax of the professor working in that college. Second duty is that once the tax is due, the tax to be deducted from his salary, and balance amount to be payable to the professor. In that case, the amount deducted from his salary is called TDS. Please note, the amount is paid by the professor from his salary. College is not going to pay from their own income or from own sources. From salary income, the deduction is done of amount that we call as TDS, and it is the duty of the college to pay the tax to the government treasury. Yes, so that is called a TDS. That benefit is going to get at the time of calculation of final amount of tax. So that we call as a TDS, tax deducted at source. So that query is there regarding the TDS. Yes, but for TDS, first of all, you have to calculate the tax, and then we are going to check that whether any amount of TDS is there or not. Yes, so TDS is going to be first of all tax. Now, in direct income, direct taxes, we already discussed that tax to be payable by the assessee. In case of TDS, amount is deducted from the salary of the employee by the employer. Please note that employer is not going to pay the tax from his own pocket. Again and again, I'm telling you, employer is doing only thing, he is going to collect the tax from the employee and paying it to the government treasury. That is called the TDS, and that is the duty of the employer. It is not the duty of the employer to pay tax on behalf of the employee. That's why we call it as a direct tax. Direct tax means tax to be payable by the assessee. You cannot pass on the burden of tax to another person. So whenever you are going to join any industry or any employment, please note that whenever you are going to pay the tax, it is your duty to pay the tax. It is your duty means you are going to inform to your employer, my income is so much, or employer is going to aware of that your income, it is their duty to calculate the tax, but it is paid, tax is paid from your income, not from the pocket of the employer. So it is very clear in case of direct taxes, tax to be paid by the person who is chargeable to tax. He cannot pass on the burden to another person. So any difficulty, any query, again, you can ask me in the tax box, query box, chat box. Any query? Now, I have discussed only regarding the individual. Please note that the calculation part, that is calculation of gross total income, is going to be different. Okay, TDS is not understand. Yes. Now I am going to explain once again TDS to you. Now I am the employee of the college. I am the part-time lecturer in the our Pune college, and college is going to pay me salary per month. Now please note. Now suppose my tax liability is of rupees 10,000. Yeah, sorry, 10,000 per month. Now I'm just giving example. I'm not giving my salary details. Now that means 1,20,000 to be payable by me to the government by way of tax. Now this 1,20,000 is my tax. In that case, it is the duty of the college to collect from every month 10,000 rupees from my salary, pay the balance amount to me. This 10,000 we called as a TDS, tax deducted at source. मुझे तनख्वाह मिलने के वक्त जो मुझे पैसा कट होता है मेरा, उसको बोलते हैं TDS. Now college is going to collect taxes from all professors together, and they are going to pay it to the government. So please try to understand. Vakil sir is also going to pay the tax, but on behalf of Vakil sir, on behalf of me, the TDS, the tax is collected by the college. That's why they call it as TDS, tax deducted at source. पेमेंट करते समय ही पहले पेमेंट करते समय टैक्स लेते हैं और उसके बाद में पैसा हमको मिलता है. सो उसको बोलते हैं टीडीएस. इट इज ए टैक्स डिडक्टेड एट सोर्स. उसी जगह उसने टीडीएस, दैट मींस टैक्स डिडक्ट किया है, उसको बोलते हैं टीडीएस. सो कॉलेज क्या करते हैं, वो टीडीएस कलेक्ट करते हैं और इमीडिएटली दे आर गोइंग टू पे टू द गवर्नमेंट ट्रेजरी. दैट मींस बैंक को पेमेंट करते हैं. सो गवर्नमेंट को वो पैसा मिल जाता है. यस, लास्ट में नहीं करते, हर एक महीने के सैलरी निकालते वक्त वो जो अमाउंट हमारा कट होता है, वो कट हुआ जो कटा हुआ अमाउंट है उसको बोलते हैं टीडीएस. Yes, this is called TDS. All professors, those who are getting salary from the college, first of all, college is going to check whether the tax is payable or not. They are going to calculate total tax. They are going to calculate monthly deduction, and that they are going to deduct monthly from their salary, and balance amount they are going to pay to the professors or employee of the college. So that we call as a TDS, tax deducted at source. देते समय, पेमेंट करते समय ही उसका टैक्स कट किया. और आगे जाके बताता हूं मैं, पहले टैक्स कट किया और उसके बाद में तनख्वाह दिया है. दैट इज टीडीएस. सर टीडीएस जॉब वाले, नहीं, टीडीएस इज जॉब वाले को तो होता ही है, लेकिन टीडीएस इज ऑल्सो पेएबल बाय टीडीएस इज ऑल्सो डिडक्टेबल बाय अदर सोर्स ऑफ इनकम. Some profession fees there. Then again the person who is paying the amount, they are going to deduct the TDS. Bank, suppose you are having FD with bank and you are getting 1 lakh rupees as interest on FD with bank, the bank is going to deduct 10% as TDS, and then they are going to pay you the balance amount of interest. That is what we call as a TDS. सभी जगह होता है. There is a limit fix किया है. If the limit is crossed, then the TDS is to be deducted. Yes, because government is not going to wait till you are going to pay the tax. Government is going to say, we want money immediately. Pay tax as you earn. जैसा तुमको पैसा मिल रहा है, हमको टैक्स मिलना चाहिए. So the government policy is that जब employer पेमेंट करता है, yes, business profession का TDS होता है क्या? Yes, definitely there is a TDS on business and profession. Whenever there is a contract, whenever there is a amount is going to be received, then contract there are sections, and under that sections business वाले का भी TDS होता है. हर एक का लिमिट अलग अलग होता है. कॉन्ट्रैक्टर का अलग होता है, प्रोफेशन का अलग होता है. That limit is there. अरे yes, that is going to be different for different income. So I have to take separate session for that. Yes. TDS we can claim. Now here I am going to show you that, suppose again the income is, suppose the TDS rebate is there and TDS is claimed. Suppose the TDS is there of rupees 10,000. You can claim the TDS. Yes, total tax payable is rupees 10,000. Rebate is 10,000. TDS is rupees 10,000. You will get a refund of rupees 10,000. Whatever amount deducted. Yes. Please note that TDS is nothing but tax paid in advance by someone else on behalf of the SAC. मैं वापिस बताता हूं, TDS is nothing but advance payment of tax to the government on behalf of someone. Now TDS is paid by the college on behalf of professors, on behalf of the employee of the college to the government. Then if the TDS is more, then the employee or the SAC is going to claim the refund from the government. Government is going to say, claim the amount, claim the TDS from the tax. If you have already paid the tax in advance more, the TDS more, then government is going to refund the amount of TDS paid. So that government is just collecting the tax in advance from the college, but the tax is payable by the employee or the professors. Yes. Any difficulty, any query? Yeah. Don't worry about the death of a. If there is a death of a SAC, his legal heirs can claim the. He has to return the file and claim the refund. Please note that whenever there is a death of a person, please, once again, please, if there is a death of a person during the financial year, his legal SAC has to file the return on behalf of the deceased person. And if the balance tax is there, they are supposed to pay the balance tax. If there is an excess payment of tax, they can claim the refund. Government is going to accept both the things. Yes. Don't worry about the death of a person, because legal heir, it is the duty of the legal heirs to claim the deductions and file the return In that case, if the tax is paid less, pay the balance amount. If the tax is paid more, the refund will be get, the legal heirs are going to get the refund amount. Yes. In case of TDS, it is depending upon the nature of the TDS, because if it is carry forward, then it is definitely you will get the refund. Okay. For I am requesting our Vakil sir to take a separate session on the TDS. Yes. So may I conclude now?
Yes, sir. Yes, sir. Sir, TDS is
Yes.
not easy. It is tedious to understand.
Yeah. It is TDS. In income tax, it is TDS means TDS, but in case of general language, it is TDS means headache. Yes. Okay. For me, it is very easy to discuss, but in actual practice, it is very difficult. So I'm once again thankful to the college authorities for giving me the opportunity to discuss about the income tax for 3 days. I am again thankful to the Professor Vakil giving me the opportunity to and selecting the topic for discussion. And I'm very thankful to all the students and participants for patience hearing and raising the query and checking my knowledge, testing my knowledge. And I'm thankful for all of you. So I'm handing over to the Professor Vakil for